All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm on here just a couple minutes early to go take a look at some of the things in the market. I titled this video "The Certainty in the Market," and I'm going to talk about a concept here, today. And a lot of times, when people write me or talk to me, they're going, "Well, what does this mean? And what does that mean?" And I don't know what the market's doing with this, and I don't know what this means, and all of that. And the reality is, yeah, neither do I. There are millions of variables in the market, and as soon as we total up all the variables, new variables come in. Right? The market inherently is a place of uncertainty. Right? But if we understand the nature of the market, accept it for what it is, well, now we can start to use it, right? Now we can start to use it. If we can't accept the inherent uncertainty that exists each and every day, or the fact that most questions are just that, they're questions. They don't have solutions, they don't have answers, they have theories, and they'll always remain questions. And if we can accept that, market becomes a lot easier. If we try to kick against that, if we try to find this market and go, well, you know what, the market means this and this happens, so it's going to do X, Y. If we try to treat it as a crystal ball, it gets very frustrating. It gets very maddening, and I'll talk a little bit more about that. But first, let's take a look at the challenge. We saw a lot of kind of 3-7 downside crossovers yesterday, things like Boeing, but didn't trigger on the downside. And what do we see? We see a chop back up here today. And Home Depot. A lot of these stocks that, had 3-7 downside crossovers today or yesterday, they're mostly up here today. And, that's kind of what we saw in the algorithm yesterday. The consolidation risk is just very high for a lot of names. It's not showing a lot of trend element here. Now, the market's up this morning, about 14 points? There's not a single stock out there with a 3-7 crossover to the upside that's on the watch list. In fact, I have a little scan here. I'll show it to you. And I'll just come on down here. But this basically just looks for 3-7 crossovers to the upside. And I'll show you the scan here. But I have it set to use just the challenge stocks, just scan for the challenge stocks. And it's using a MACD 371, which is the same thing as using the moving averages. It's just a lot simpler to program using the MACD, but it's looking for the same thing. It's looking for the 3-day moving average to cross above the 7-day moving average, both of them exponential moving averages here. And you'll see 0 out of 0 entries. There are no 3-7 crossovers to the upside, so no real triggers there. If we just reverse this and look for downside crossovers, I'll show you what this looks like here. We have AT&T. Right, we have one stock, AT&T. We had Verizon yesterday. They were downgraded, here overnight. But if we go and take a look at AT&T, you kind of see what this looks like. It has the 3-7 crossover, but the 39.1 is trading well above 50. We're not normally going to see a bear signal come in. When I looked at this, the consolidation risk was very, very high. So not signaling a new downside trend here. So, no new signal coming in here again today. I wish I could make them up and say, well, yesterday Boeing is a signal. Let's go. Just can't. Just can't. They're not there. And for as much as I looked at Home Depot yesterday, and I wanted to go, man, I really want to short this so bad. I love that candle from Tuesday, and I really want to short this. It just wasn't there. The signal wasn't in play here. So anyway, that's where that is. Now you'll notice, and I posted in the message feed this morning, there is a new spreadsheet link for the challenge. So the old one, it'll exist as it is, but it will not be updated here. So please. If you want to see the most current, go grab that new link, and that'll be the link for about the next week. And then we'll change that out, the following week. and that's just for security purposes. So, we'll see, different links come in from time to time, but it'll be the same spreadsheet, same information, same data. Okay, so still sitting in cash, sitting a little bit above 4,000 for the challenge, and all in cash. Those of you who know me, I get antsy when I'm in cash. I want to be in something, but again, it's not something that I have that decision to make here. All right. So let's go talk about the market here, and I kind of started off and alluded to the fact that a lot of times in the markets there are a lot of questions and very few answers. But when we really look at the market and we break it on down, 95% of the market's pretty easy to break down and say, hey, this is what's happening and this is what's going on. This is the certainty. Now, if we start to pull out a microscope and look closer and closer and closer, and we start to look in kind of narrow down time frames, predict what's going to happen tomorrow, it starts to become a lot dicier. If we try to get involved and say, well, what's President Trump going to say tomorrow and how's that going to affect the market? Yeah, you just start getting more and more questions without answers. So I want to go out and focus on what we know, what the certainty is in this market out here, and what that means for traders and investors, because it is a very certain market out there. It is a market that we have seen a million times. It is a market that we will see again, and it is a market that has very simple implications for both traders and investors. It is not a market of a million unknowns. Yes, there are a million questions and unknown variables out there, but when we go and we look at what's important and what matters, it's a very certain market out there. So what do we know? Let me just pull up an S&P chart here. Here's the SPY, and I'm just going to get rid of all of our indicators. And here we are. Right? We know that this year, big up. Now, finally getting a pullback. It's kind of been a slow motion pullback, right? And when you look at the pullback, you really only have two big days where the market pulled back on the first leg. And here on the second leg, we have one gap and then one afternoon sell, basically, of pullback. We're talking about a month of pullback with really only four times or four periods where the market actually really sold. In fact, a lot of the days the market's actually been bought up from the opening price. Right? You see a lot of hollow candles in here. So gap down, but market closes higher than what it was. It's been choppy, right? It's been very choppy in terms of the trade. There's not been a lot of fluidity or smoothness. Well, is that uncertainty? No, that's certainty. That we know that environment. We know that when we go into a summertime market environment, the probability of chop, the probability of just, up and down, wish-wash, back and forth is significantly greater. We don't have to look back too far to see it. Here's May. Last May, it had what? 1, 2, 3 big up days, right? Then what did it have? It had 3 weeks of just absolute chop. It's going to break on down. Oh, no, next day up. Oh, next day down, right? And then it goes on this 3-day run, and then it gets more chop. 1 day sell-off, more chop. 3-day rally, more chop. Right? A summertime market is one where you get a few days of movement, but the majority of the days on a summertime market are chop. What does that mean? Well, that means that, yes, trends emerge and trends happen, but trends are a little less likely. Right? To see big downside follow through is a little less likely. To see huge upside follow through is a little less likely. Now, that has nothing to do with the price of tea in China. That has nothing to do with the trade war. That has nothing to do with U.S. politics and European politics. That's the norm. We can go back and look at chart after chart, year after year after year after year. They all have different issues in them, but they all react the same. They all do the same thing. Yes, it's new issues, new day, but the market characteristics are the same. And that's the certainty. That's one of the certainties we know, that in this environment, the chop is heavier. What else do we know? Well, we know there's a trade war between the U.S. and China. We know that both China and the U.S. have strong incentives to come to a resolution, but we also know that both sides cannot afford to appear weak. Both sides have to appear strong. So it's one of those where, yes, both parties need a resolution, but they don't need it immediately. As long as markets hold up, they can continue to be on differing sides. They can continue to act the aggressor. Each side can continue to act as, hey, we're not going to take this from the other side. They can continue to act as the victor. But eventually there's going to come a time where the pain is felt. And what's going to happen? Well, they're going to have to come and make a deal. And the bottom line, a deal will happen. A deal will happen, and a deal will happen in a way where both sides are able to save face and both sides are able to declare victory. But we know that's not going to happen tomorrow. We know that's not going to happen next month. We know that's not going to happen in 2 months. This is going to be a long, ongoing process like it has been. And so headlines will affect some of this chop, and it will affect some of these waves. It will create ripples. We know that. We also know that as soon as a deal is done with the U.S. and China, it's going to be the U.S. versus Europe, and the U.S. versus the EU. And that's going to be the next place that it goes. Right, and so it's going to be the same saga, same story, just different player. Instead of China, it's the EU. Right? Is it going to kind of work out the same way? Yeah, probably. Where there's going to be a lot of posturing, there's going to be a lot of kind of back and forth. Now, will the EU have the same incentive to make a deal as does China? Well, you could argue they won't. And that, we could see something a little bit different from that. But we know that that's what's coming. We know that a trade war hurts the economy. We know that a trade war will affect earnings on companies like Nike. We know that a trade war will affect, some of the growth prospects for companies as they go forward. And we know that tariffs will ultimately trickle down to the consumer, and that the consumer data will get hit by the tariffs. Is that uncertainty? No, that's not uncertainty. That's knowledge, right? That's what the market knows. That's what the market's priced in, right? When markets make big moves, it's because they're pricing in their what is happening isn't priced in. And you know what? We saw in May, we saw U.S. President Trump come out with a tweet basically saying, hey, no trade deal. Trade deal's off. And the market has subsequently priced that in. Yeah, it's priced it in basically 4 down days, in an entire month, but it has priced that in. What do we know about the economic data? Well, the economic data is very clear. The economic data is about as clear as it can get, right? The economic data is still showing growth, but that growth is slowing. It's still above zero. It's still growing, but it's like a car decelerating. Right, it's decelerating. It's kind of hitting the brakes here. It hasn't gone to contraction. It hasn't started to go in reverse, but its speed of growth is slowing. That's nothing new. We've seen that all year, right? And look, the market, it went up as things were decelerating. Right? There are some pieces of data that this month have started to actually show a little bit of acceleration. But when you look at the data on a whole, on aggregate, we are seeing this kind of deceleration factor. That's not, what's going on with the data? That's certainty. That's knowledge. Market knows that. What's going on with earnings? What's going on with revenue growth, right? Well, that's easy as well. We know exactly what's happening with earnings and revenue growth, right? They're growing. But there are, when you look at the estimates going forward, it's showing the same as the economic data, that the growth is ready to slow, or the growth is going to be slowing. We can see this very clearly with something like a Home Depot, right? Let me just come in here to Estimize. And if we come in, Home Depot's had great growth rates and everything else. It's done phenomenally well over the past several years. But if we come in and start to look at future growth rates, so here we are, Q2 of 2017, 14% earnings growth. Q3, 15%, 17%, 25%, 36% in Q2 of 2018, 36% in Q3 of 2018, 33% in Q4, Q1 this year, 9%. Q2 this year expected to be 1%. Q3, 1%. Q4, minus 2%. What's happening? Are we talking about earnings contraction? No, we're talking about earnings growth slowing. We see it all over the place, in most stocks, in most situations, and in the market as a whole. If we look at it from a revenue standpoint, we see the same thing. 6% growth, 8% growth, 8, 4, 8, 5, 11, 6, 2, 5, minus 2. We're looking at the future, and the future is less revenue growth than what the past has been. Okay? That's not unknown. That's not uncertainty. That is what the market knows. Now, if we take all this stuff that the market knows, if we take all this stuff that I'm referring to as certainty, right, we can ask a million questions about it. And we can say, well, if it changes, what's going to happen and all of that. But think about what the environment is. It's a normal summertime chop environment, has this kind of trade war element looming over it, right? Which can have headlines any day, so we know that could create chop. But there's a bullish resolution possible, and there's, no resolution for a long time, can have some very bearish ramifications. The data is still showing growth, but slowing. So think about big money investors. How are they going to act in this type of environment? Well, they're going to act like they have throughout history. They see what's out there, and they go, look, it's not horrible. It's not a depression, but it's not boom, big, bad, boom, bull market. So they're going to look, and they're going to go, look, when things go on sale, I'm willing to buy them. When they're expensive, I'm going to sell them. And that's what we continue to see, right? And we will continue to see it. And we'll see stocks react a little bit to a little bit of a different magnitude, right? Here's FedEx, whose numbers are remarkably worse than a Microsoft, right? Whose numbers are phenomenally better than a FedEx. So we're going to see individual stocks diverge. But this idea of, hey, you know what, investors are just going to buy Microsoft every day because it's a great stock. No, right? They know what the environment is. They know the risk factors out there. They see what's happening. And while the rest of the market is asking 15 billion different questions, those fund managers are sitting back and saying, all right, you know what? Let it pull back some. When it does, all right, I'll get off the golf course and I'll go and I'll buy some. They know how they're going to react. They're not sitting there going, what's the headline today? And, oh, man, should I buy Microsoft today? Should I sell Microsoft today? What should I do today? No. The macro factors out there are incredibly certain, are incredibly known. There's not a lot of unknown. There's not a lot of variance out there. The chop kind of makes it feel like that. The media makes it feel like that. But when you look at big-time investors and big-time fund managers, They're not sitting there going, oh, man, what did CNBC say this morning? What did MarketWatch say this morning? Oh, well, is this analyst bullish or this analyst bearish? And, let me follow U.S. President Trump's Twitter feed. No. They're sitting back and saying, all right, we know where the quality is. We know where the garbage is. Eventually, we're willing to buy the garbage, but the garbage better get pretty cheap. Because a little dip in FedEx is not a little dip in Microsoft. They're two very different things. And so it's going to continue during this summer to be a story of chop. Now, when we look historically over the course of any summer, there are almost always a few trends that come in. And stocks will go on trend, from time to time. Not as much as during the fall and the spring period, but when they happen, they can be pretty fast. They can be pretty explosive. And if you're sitting on the sidelines, it can pass you by, relatively quickly. But I'd argue with you that this is one of the most certain markets that we've ever seen, where the questions, they're all answered. Yeah, they may not be the questions or the answers that everybody wants, that everybody likes, but show me a market ever in the history of the market where there weren't questions and where there weren't questions without answers, right? There's always going to be that. Right, there's always going to be that element. China, they stopped some of their imports of soybeans from the U.S. Okay, what's that going to do? How's that going to? Okay, great. We know that's another piece of the chop. We know investors are going to react how? They're going to buy the oversold. They're going to sell the overbought. Right, and that's what they're going to do. And so you can react. It has a few implications for traders and investors. From an investor standpoint, you have to throw away the headlines. You have to get rid of the noise, because the noise creates uncertainty in what is very certain. And you look at your stocks and you say, okay, here's Visa. I'm bullish on Visa. I want in Visa. Is it now the time to buy? Well, it's sitting near a 52-week high. In a summertime chop environment, do you want to chase a stock at a 52-week high? Well, historically, no. But when you look at Visa, you chase a stock at a summertime 52-week high, it's paid off plenty of times in the past, right? So what are you waiting for? Well, you're waiting for a dip. You know what? Fine, it gets a decent dip in there, gets a little oversold on the stochastics. You say, well, I'm not going to be foolish enough to say, well, I'm going to pick the bottom, but I can start to step in, right? I can start to step in. You take a look and you say something like a FedEx, and you go, well, wait a minute. FedEx, nowhere near the same fundamentals as Visa. And this is a stock we could argue is a $120 stock. So, yeah, I'm not going to be willing to step in, on just, hey, this is oversold. Right? This is something where I want to start to see that some things are changing, that there's some, fund flow changes happening with this stock. Was it happening yesterday? And yesterday, well, okay, go. No, it wasn't. Right? It outperformed a little bit in the morning and everything else. But do we see a big volume bottom? Do we see a higher low? Those are the two things you got to see, either a big volume bottom or a higher low. Do we have either of those with FedEx? No, we don't. So it's a very easy decision. From an investor standpoint, you stay away. What about Bank of America? I talked about this one a little bit yesterday, right? From an investor standpoint, it has hit a level of oversold where fundamentally it's become cheap. And where I look at it and I say, you know what? This is now getting interesting to me. Doesn't mean I'm stepping in and buying it. Doesn't mean I'm going out and, getting in big. No, I got to look at what else is going on. I saw something pretty interesting from an option standpoint. I said, look, the way they're trading these options right now, they're not going to let this stock go higher unless there's some sort of catalyst, and then they're going to be chasing. They're going to have to, blitz. So I'm going to watch it. This morning it opened up, it rallied just a little bit, but there was no real vigor in it. So, started to pull back, and it was, okay, no, it's still not ready, right? It's just still not ready. It's not there. And so I don't have to, it's not like I have to sit here every moment of every day and go, well, what does this mean? What does that mean? And what does that mean? And what does this mean? And, well, it's now at 27.50. Oh, it was at 27.70. So what's that? Right? No, I could kind of sit back and watch it. And one of the easiest ways from an investor standpoint to take a stock like Bank of America and to say, hey, you know what? When is it probably the best time to step in and buy? Well, go put a simple 7-week moving average on a weekly chart. And if it's trading below the 7-week moving average on the weekly chart, chances are you're just trying to bottom pick. And so you better be at a level where you're very comfortable buying because of fundamentals or something else. When it breaks back above the 7-week, that's when the trend really kind of gets to be on. So, yeah, it's had a dip. Is it ready to rip? Is it ready to, step in and just be a buyer? Well, you can from a day trade and all of that, but from an investment standpoint, fundamentally it's a little bit better than it was. It's finally had a little pullback, but it still doesn't have, much life in it with the bulls showing signs of stepping in. So it's a very easy decision. It's a very, very simple decision. It's not one with a lot of confusion or uncertainty. Could you go play it short? Yeah, you could, right? Where's your stop point? Well, I'd argue there's a lot of uncertainty there, right? That's one where there's a ton of uncertainty as far as where do you put a stop point on something like Bank of America. Okay, so we know what's happening in the market. What's this mean from a trader standpoint? Well, earlier this month we talked about the stochastics and we talked about the CCI. Right? And we talked about that in a market of chop, one of the best indicators out there is the Commodity Channel Index, the CCI. One of the absolute best indicators. If you're going to look to buy dips, you want the CCI down here at minus 300. It doesn't necessarily mean that, you're going to buy it at minus 300 and the stock's just going to go back to a new high. We can still see it, dip on down a little bit further. But after we see this minus 300, that's typically when we see some of the rally come in. Well, here we go. Minus 300. We saw a little bit of rally over a couple days. Not really enough to make an option trade, right? Then we get 1 day worth of sell-off. We're selling off here. But notice the CCI is not really pulling back all that much. We have some positive divergence starting to shape up here. If we start to see the CCI come back here to minus 200 and then bounce back above minus 100, we have a really nice kind of bull signal if that takes place, if that shapes up, and if that happens. But right now where it is, no, it certainly isn't, at that spot. You take a look at something like a FedEx, right? It hasn't hit that, CCI monster oversold level yet. You take a look at something like an Alcoa. It's getting closer, right? It's getting closer, but still not there. There are a lot of stocks in this situation where, they've sold off, but they haven't gotten down into this minus 250, minus 300 oversold level that typically will mark a bottom. They're just not there yet, right? So it's not worth going out and bottom picking some of these here, just yet. We can go take a look at an Apple, right? Apple on this big gap down had a minus 300 read. The next 3 days had about a 7.5, 8 point rally, right? There was a really nice rally off of that, severe oversold, but now it's pulled on back. Is it severely oversold again? No, it's not. It's less oversold today than it was when the stock was $10 higher, right? And so it's one where, do you step in and buy the oversold? That's a tough buy from a trader standpoint, right? And that's just kind of, the way, the way if you kind of look at it and say, well, I'm going to buy when it's, at those oversold levels, you'll notice there's still not a lot of that to step in and buy, right? From a daily chart standpoint, and there hasn't been a lot of that to step in and sell either. Here's Microsoft. It hit the super overbought position right up here, and it's been consolidating ever since. Hasn't hit a big oversold position here just yet. But, in the summertime, when it's choppy, when there's uncertainty, when the uncertainty is certain, right? The CCI is one of the best indicators, and it's one that if you're looking at it from a daily chart, okay, fine, but you can take this and narrow it down to a 1 hour chart and get a little bit, a few more reads come in, a little bit of better kind of short-term play action coming in here with it. You'll see Apple, it's going to have more overbought, more oversold, positions here on it, and shaping up with it, right? But you'll notice I'm not talking about trend, right? There were trends that signaled back here, brand new trends that signaled back here at the beginning of May. And, I did a whole video on them. We had FedEx, we had Apple, we had a whole bunch of companies, Alcoa, all make these kind of pretty massive downside signals when the challenge was, on break there. But we haven't seen new signals really come into play suggesting, big, massive downside trend or big, massive upside trend, shaping. Most of it has been a Boeing type of situation where it's just, challenge started here on May 9th, right? And here's Boeing. It had, we had a day up, a big bad day down, right? No follow through to the downside after that day. 1 day up, 1 day down, next morning up. I had 1 day follow through, then drop, then next day pop, then next day down, 1 day gap down, big up, right? These are 1 to 2 day things. These are not trends. These are day trade overbought, oversold type of, short-term, very short-term type trades, but no real trend here. Yesterday we have the down. All right, it's ready to break on down. It's ready to be at no. This morning pop and break up, and that is not uncertainty. That's not unknown. That is what we'd expect given what the variables are out there. And you know what? This morning's news headlines aren't going to change that, right? Now, in this type of environment, right, we need to be cautious and we need to be aware that, hey, you know what? Trends are going to start to form. And I made the comment earlier this week that a lot of times what we will see is that before the market goes on a new trend, we'll see a lot of stocks actually signal before that happens. And I've kind of just been wondering in the back of my mind, do we see a lot of bull signals come in this week, even though maybe the market goes down? Do we start to see that? And so far we haven't, right? We just haven't seen that, here, just yet. Things that were close just still haven't signaled, like a Facebook, which, could still signal here today, but, just hasn't, just hasn't here just yet. But, what do we start to see signs that these big fund managers are acting differently? It's one thing to have the computer algorithms and all of that, doing their thing. But are we seeing signs of the big fund managers doing anything different? And yesterday morning, I talked about the fact that, we are starting to see signs that some of the big funds are doing something a little bit different. Take a look at yesterday's volume. Compare that to the day prior. Compare that to Friday last week, Thursday last week. The volumes yesterday were some of the strongest volumes that we have seen on S&P futures. What do we know about strong volume? Right? We know one thing about strong volume. That strong volume tends to mark tops and bottoms. That's it. You don't get strong volume in the middle of trend most of the time. You don't get strong volume that denotes a new trend. Occasionally you do, but not normally. Heavy volume tends to mark key pivot points in stocks and in the market. And yesterday we saw some heavier volume. It's not massive volume. It's not the kind of volume that absolutely jumps off of a page and says, man, this is the end of a multi-year bear market and man, we're just going to go up every day from here. No, not that kind. But yesterday morning, what did we see? Yeah, we saw the market sell off, but we saw the stocks that were oversold not getting sold again. We saw the short sellers starting to come out. Those monies actually starting to do something different, for the first time this month. That didn't mean that a Microsoft is going to rally and a Boeing is going to rally and, all of that. But we saw the fund managers just acting a little bit different. That doesn't mean, bottom's in, everything is going to be smooth sailing here now to the upside, right? That's not what it means. We could still actually go back and test and even come just slightly lower with some of the chop. The chop element can create a lot of variance, here with it. But the price action that we saw yesterday, what's it tell us? It tells us that the possibility of a significant bottom right here is high. And that if we start to see upside trend signals, those could just be the beginning of something pretty, the next, trend, the next wave here in the market. So far, we don't have confirmation that that's the case, but we have a signal or we have a sign of what typically happens ahead of that. Will it happen? So far, it hasn't. So far, we don't have any, even with the rally this morning, and I see it selling off now, but even with the rally this morning, we don't have any sign from stocks saying, oh, man, we're ready to just go trend upwards. It's not out there. I know Bank of America was green this morning, but did not have that signal. Microsoft did not have that signal. Visa did not have that signal. These stocks did not have any type of that typical signal that we see. And I showed that with the 3-7 crossovers of, hey, you know what? It's ready to go. So, yes, we have a sign of, hey, fund managers acting a little bit different. Now the market's a little bit oversold. They start to act a little bit different. Sure, we have that sign, but we don't have the indication that it's kind of full on, tilt back here just yet. And frankly, I don't expect it. I don't expect it yesterday. I don't expect it today. And I don't really expect it tomorrow going into the end of the month. Because what do we know about summertime end of the month? Now, the seasonality or the norm is for a little more selling than buying. It's not, on a probability basis, very big in terms of, hey, sellers versus buyers, and hey, if you just sell for the last day of every month, you're going to do great. No, there are plenty of last days of the month that see some buy-ins, but we know that's the general tendency. And so it's one where, are we going to see brand new upside trend signals come in that? No, probably not, right? Are we going to see some downside trend signals come in? Yeah, we could, right? I thought, maybe yesterday Boeing, had 3-7 crossover the downside. It could still signal here today, right? There's nothing to keep it from signaling here today. But so far not in that position, okay? Hopefully that helps in terms of giving an understanding of what this market is, right? As traders, as investors, right, we can't control what happens in the market. We can't control what the environment is. But we can know what it is. We can understand what it is, and we can understand how we should react, and if we should be getting super aggressive, or if we should get a little more conservative, or if we should be using oscillators, or if we should be using trend indicators, right? Yesterday I talked about a trade that I made. I bought some Procter & Gamble calls, right? You say, well, Jeff, what are you smoking? I mean, Procter & Gamble, it's pulled on back, it's below the 7, yeah, you're right. And it's not a challenge trade. It can't be, right? Can't be. This isn't a trend. This is playing oscillation. But I know in this environment right now, there aren't trend setups, but there are oscillation setups. And those are the setups that, are going to be more profitable in the short run until we see real trade setups or trend trade setups come into play. One of the difficulties of going to an automated algorithm challenge is deciding which algorithm to use. Do we use a trend algorithm? Do we use a chop algorithm? And, I've talked a lot about different chop trade strategies, different different oscillation strategies. We've done a lot on that and talked a lot about those. I've run a lot of tests with those to automate and to say, well, can we apply it to the challenge? And the reality is no, it doesn't work. It doesn't work at all. It's terrible, actually. Right? It's too quick. To be able to say, well, trades are going to happen at 2 times a day, and to then go trade chop. You can get 3 chops before you get to the next trade time, right? And so from a challenge standpoint, from an option, applying that to options for others to follow, it's just not realistic. It's not realistic at all. It's not possible at all. And so it comes down to, what is this challenge and what is the algorithm? What is it built around, right? And it's about survive the chop, thrive in the trend. And that's what it is. That's the mentality. That's the methodology behind it. And so, since the challenge has started, it's been a heck of a lot of chop. It has been a ton of chop out there. And challenges definitely survived the chop. And you can look at where each one of the 3 challenge trades are, or what they were, right? Procter and Gamble Signal. We didn't get a massive trend. We didn't go 2 ATRs. It's been pretty much chop, but was able to capture and use that time stop effectively, right? JD, this is one that triggered to the upside, but didn't materialize, right? In fact, some of the news changed it. We ended up getting bumped out on the time stop. Had we not, been pretty darn ugly, right? But as it was, took a $100 loss. And then with J&J, right, where we got the upside signal, J&J started to work, started to go, started to happen, but we got the time stop, right? We got the time stop. Unfortunately, happened, before the big drop. But, there's a reason the time stops are the times that they are, is because, just if we go longer on the time stops, the probabilities shift, and they shift dramatically. So, the whole idea about the algorithm challenge is to survive the chop and thrive in the trend. And so far, we're surviving the chop. And if we can survive the chop with a little bit of gain, great. All the better. But, it's one where we go and we look at something like a Facebook. Well, let's just go to a Raytheon, right? Had we been in and out of Raytheon on every 3-7 crossover, challenge would be at 0 right now, right? It would just chopped us the heck out of it, and just kind of made Swiss cheese out of the challenge. And so, it's not one of those things right now where the challenge looks and goes, man, it doesn't know what's going on in the market or what's happening and what's taking place. No, it fully understands, right? I mean, there's a lot of certainty there. The environment is very certain. It's just an environment of survive, not thrive. And, so far, surviving it. And that will change. That will shift. And when it shifts, it's not going to be all of a sudden, there's the green light, right? And everybody knows at one key moment that everything has shifted. It'll be one of those things where a month later, everybody will know that the environment has shifted, right? And, the first trend trades that come in, it's going to be like, well, wait a minute. Is this going to trend? I mean, come on. Everything's chopping right now. Is this going to trend? But that signal's going to come in. Those signals are going to come in. And yes, the market environments may not feel that different, but those signals will alert before, a human can actually say, well, the environment is actually changing. One last thing I want to show, just because I was asked about it yesterday, and that's the bullish percent index. You'll notice continues to drop, continues to fall. There's no kind of bullishness in it at all. Let me take it off of the log scale. The market vibe is at -8. Neither of them are oversold yet. Bullish percent index isn't oversold. The market vibe isn't oversold, though the market vibe is close. One thing you can put on the bullish percent index to look for oversold, and we talked about this when we looked at the indicator, but a 28-day RSI. on a 28-day RSI, when you start to get below 30, you're talking about a significantly oversold condition. We saw that come in a few times. It's not there yet. It's not there yet. So getting closer, but still not there. Still not a market where we can say, well, there's not going to be a few more bad days ahead. Thanks for hopping on. Have yourselves a great one. I'll be back on with you here this afternoon, and we'll talk to you later. Take care.